Today, we're talking to Chris Wiley, an experienced real estate investor, about how and why to get into the real estate investment business.
My philosophy was the property needs to cash flow. That goes a long way toward helping you make your offers, structure your deals, setting the conditions in terms for yourself anyway, for what kind of interest rates you're willing to pay.
We're also going to talk to him about when to take a risk.
Well, I think getting up in the morning, getting out of bed is a risky thing to do. So if you get my drift, there's no such thing as a risk-free life. And people who pursue a risk-free life tend to make really dumb choices. I think that once you accept the fact that life is nothing but risk, then you need to, you find yourself in a situation, well, how can I live with this reality? One of the great things about being a Christian is you have these assurances that even if things go really bad, that, the Lord still loves you. He's still working in your life.
All that and more on this episode 502 of the Working Cows podcast, brought to you by Ranch Right and Sunshine Bible Academy.
Welcome to the podcast that gives producers a platform to discuss and share paradigm-challenging practices that have increased the effectiveness of their operation and the joy that their families have received from this lifestyle.
Howdy, everybody. It's Clay Conry, host of the Working Cows podcast. Very excited to be joined today by Chris Wiley. Chris is a podcaster, been podcasting for a long time, also a pastor and a real estate investor. And we're going to talk to him about balancing all those things and the how and why and when to get into real estate investment, because one of his podcasts is the newly minted Chris and Chris Talk Business. And I appreciate that podcast as well as the other one that he does, the Theology Pugcast, and been a longtime listener of the podcast and wanted to talk to him about this new podcast and get some direction, because I know there's people out there who are having profitable years over the last few years and looking for places to go with their with the excess and figure out how to invest that. And real estate is one of those opportunities. And he's a guy who's been successful at it for many years. And so I think he's a good one to learn from. And really excited to share this conversation with you with Chris Wiley. Chris, thanks for joining me today on the Working Cows podcast.
Yeah, Clay, glad to be with you.
Yeah, been a long time listener of the Pugcast and have taken in the 2 episodes of the Chris and Chris Talk Business that you have released, and so wanted to kind of go down the entrepreneurial track and talk to you about the idea of entrepreneurship, and then also about the idea of investment from that. And so I guess where maybe we should start is just kind of your story as it relates to entrepreneurship and what you have, how you've been involved in that.
Well, I guess I have an entrepreneurial kind of way of thinking about my life and the things I'm involved with. So even with respect to the pastoral ministry, I've kind of thought of myself in those terms. And I don't really think of myself as an employee of the church, for example. And there's a whole big theological discussion we could get into with that. But I guess what I would say is, if people are maybe aware of my background in the pastorate, the kind of the pattern I've always sort of had in the back of my mind is the Apostle Paul. And there was a guy who had a side gig. Not many folks appreciate that, but it was something that he sometimes, in a very oblique way, would talk about in his letters. He'd say things like, you guys didn't have to pay me. Stuff like that. I took care of myself. It's the things like that. And you're like, well, how do you do that? Did he just have offerings that he collected at other churches and then, lived off those? But no, actually we know in the book of Acts that he was a tent maker. So, which is a really great profession if you're going to be on the road a lot. It's very portable in terms of the stuff you have to sell. And then, of course, you're going to be around a lot of people who are living in tents because, there weren't any Motel 6s or anything like that back in the day. And so he, I anyway, I don't know much more than that. He was such a character, such a sort of a non sequitur. He has so many things about him that are atypical of what you would think of, when you think of like a pastor today. But anyway, because of that, I always have had kind of side gigs, and some of the side gigs have done pretty well. And one of those has been commercial real estate investing. So that's where I have kind of cut my teeth, mostly when it comes to work outside the pastorate. I'm a writer, and I speak and I travel, and I was a college professor for a while. But it's the real estate stuff that really gets my juices flowing even today. I'm not looking to buy new property or anything. I'm 65. No, that's 63. Almost, I feel like 65 sometimes. But anyway, I'm getting close to the official retirement age. So I'm not looking to like grow my portfolio or anything. But that's where my thoughts have developed on this. And I've always enjoyed reading people who addressed the subject of risk and how to take good risks and things like that. So Nicholas Taleb, I don't know if you've ever heard of him, the Insurdo series. That's great stuff. He's quite a personality. I just like, reading his stuff and his outlandish comments and stuff. But anyway, so that gives you a little bit of background on me.
Yeah, very good. I appreciate that. So let's talk a little bit about that. What has your career in real estate investment looked like? What's kind of been the trajectory of that?
Well, I was very fortunate in the sense that I got in at a time when, it was very different than it is today. So I bought my first 2-family in 1994. So, and it was driven, kind of by, as a mixture of necessity and just opportunity. And I bought it in Boston. And when I tell people that back in those days, nobody wanted to live in the city, they just kind of can't believe it. Everybody was moving out. It was the height of the crack epidemic. They were desperate for young people, especially young families, to kind of put down roots in the city. And so they had all these programs to incentivize that. And my wife and I, we were involved in urban ministry, didn't have much at all in terms of income. But because they were so desperate, they were willing to lend to us. And so I got into a 2-family and inherited an Irish Catholic family. It had been living downstairs in this 2-family for like 30 years. And not long after we bought the place, they eventually bought some property in a nearby area. So this, as I noted, is in Boston. It was in Dorchester, down in the Lower Mills section of the town. If anybody's from Boston, they know that part of town. But anyway, so that got me started. And like I said, things kind of were up and up after that, because I went through like 3 real estate booms, and more or less just in the process kept acquiring property. And by the time 10 years later, in 2004, I had 18 tenants and property in 3 states. So that's kind of how that went. But I was doing it all just part-time stuff on the side.
Yeah. And you allude to that, and my son and I were just traveling in Dallas, Texas, and it was very interesting. You could see the gentrification happening, where those places that had been vacated, and I don't know if it happened at different times in different areas. I suppose it was kind of different times, and so whatever, they were vacated in the 70s and the 80s, and now we're starting to see like this desire to live in the city and in the urban core, and it's just one house is run down and fallen apart, and the one right next to it's been obviously rebuilt, remodeled in recent days, and you see those two things happening right next to each other. So is that kind of what you're alluding to as far as buying in Boston in 94?
Yeah, so, in 94, like I said, it was the height of the crack epidemic, so you had all kinds of nutsy stuff going on. I was mugged outside the Ashmont T station, which was only a few blocks from the house that I bought. So that's the way it was. And then you had the Giuliani policing revolution, and suddenly everybody wanted to live in the city because it was now safe. And it was just, remarkable just how attitudes changed overnight. Everybody, all the liberals still like to hate on Giuliani, but they really, deep down inside, had to admit that he had made the city livable again in New York. And anyway, and so that was picked up in other cities. In Boston enjoyed the same kind of renaissance. And then you had all these television shows like Seinfeld and Sex and the City and all this kind of stuff. It made it all seem so glamorous and cool. And then, of course, there are a lot of great things about being in a place where you can walk around to restaurants and do things, not have to like travel 30 miles to get to the big box store like Costco or something. So there was a lot of that going on. And then when I was there, I was, like I mentioned, I was doing urban mission work. When I first got to, so I'd been in Boston from the early 80s, but back in those days, we still had burned out sections from the 60s riots following, MLK's assassination and all that kind of stuff. So it was still kind of like a war zone in certain places. Now you can't find any of that. Even in the old tough neighborhoods, it's all gentrified. And it's kind of fun because I remember back in the day, in terms of like ethnic churches getting started in different neighborhoods, you'd have, these old sort of liberal churches that were dying, and they would rent space to these like Haitian and Dominican churches that were just like bursting at the seams. And now it's completely reversed. Now those old Haitian and Dominican churches own the buildings, and they rent space to hipsters who are trying to start cool white, sort of churches. So it's kind of fun how things turn around. I find it amusing.
Right, for sure. So maybe talk a little bit about the managing the ups and the downs. You said you've been through 3 real estate booms. Does that also mean you've been through 3 real estate busts, or are those two kind of inextricably linked?
Yeah, well, yeah. When there are booms or busts, and the busts are the times to buy if you're in a position to do it. And when you feel like things are kind of getting crazy, there are some properties over the years that I wish I had not sold. I look back on those properties today and say, what was I thinking? Should have held on to those. But there were times where I said, things are kind of getting crazy. Let me give an example. So I remember right before the crash in 2008 with the subprime mortgage crisis, I had a 2-family in Connecticut, and hadn't owned it very long, but I could see what was happening. And this is one of the things that I think a lot of folks don't know is that that film, The Big Short, which goes into a description of what was going on. In one sense, it's accurate. Everybody in sort of like Wall Street, the talking heads on CNBC, they were all a bunch of morons. They didn't know what was going on. But anybody that was on the ground knew things were nuts. So I could see that things were about to just kind of fall apart. So I put this 2-family up on the market. It needed a new roof. So I said, okay, I'm going to give some money back at closing for a new roof, whoever wants to buy it. And I ended up getting an offer that was significantly higher than what I had listed it for. But what they wanted is even more money back at closing. I was still going to end up walking away with what I planned to, but they were going to walk away with even more. It was a no money down deal. And so I said to them, okay, this sounds kind of crazy, but if you can get it to appraise, we'll do it. And they did. They got it to appraise. And when we were at closing, the lawyers said, we'd like you all to step out of the room. And they were doing some monkey business with the numbers. And then we came back in and we all got our checks and went home. And then 6 months later, that property was in foreclosure because what happened was that guy walked away with like $50,000 at the end of the day and never paid his mortgage after that. And I heard through the grapevine that the guy put it all up his nose. He was an addict. So it's just that's the kind of nuttiness that precipitated that big meltdown in 2008. So I pulled a lot of stuff out at that time. And then after the crash, I bought some again.
Yeah, for sure. And so do you have any advice for people as far as managing the ups and the downs, or how to buy, when to buy, or is it just having the margin to be able to buy when the bust hits? What are your thoughts there?
Yeah, I think that's right. I mean, my philosophy was the property needs to cash flow. So if it doesn't cash flow, then maybe you're getting into the real estate world for other reasons. Maybe you're looking for write-offs. Maybe you're doing, just an appreciation play where you think that maybe this property will someday be worth a lot more, but you're never going to break even. I can understand those other approaches, but my philosophy was always it has to cash flow from the start. So that goes a long way toward helping you, make your offers, structure your deals, kind of, setting the conditions in terms for yourself anyway, for what kind of interest rates you're willing to pay. Now, things over the past few years have been kind of tough. I mean, it's a very different market right now. So I'm not strongly encouraging people to go into real estate. I'm more or less saying, you probably should start a business of some kind. And then with the proceeds of the business, if you get enough squirreled away in the bank, and you're looking for some place to put it, then probably real estate's a good choice. That's kind of like the Ben Franklin approach. That's how he handled his real estate investing. So a lot of folks know he was a publisher, a printer, and he did really well with it. But in terms of his profits, they all went into real estate.
Let's take a quick break and hear a word from our sponsor today, Ranch Right. We've been telling you for years about the power of working with the team at Ranch Right to help you acquire actionable financials so you can build a profitable business and pass on generational wealth. Don't just take our word for it. Listen to some of these responses on a recent survey of Ranch Right's clientele. 97% of them said they understood their financials better as a result of working with Ranch Right. 91% said Ranch Right saves them time, and over again in the survey, these ranchers say the value of working with the team at Ranch Right is the team. Many of them remarked that the conversations with their Ranch Right team member helped them see the opportunities they had for business growth and success. They used words like eye-opening and helpful to describe the reports, saying that they had more clarity about the next step as a result of the product of Ranch Right's work. Head over to ranchrightllc.com today to book your discovery call and see how Ranch Right can speed up your path to profitability. What about like being a landlord and managing remotely? You've mentioned both of those kind of parts of what you've been up to as far as having property in multiple states, and then also just most of your properties have been these properties that do produce cash flow from renters and some of those things. Any advice or tips or tricks there?
Oh yeah, I got a lot of thoughts. So I think generally, if you're good with people, and I don't mean just that people like you, but you know how to work with people and how to communicate and you kind of read people well, that's a huge plus. And then the other thing is if you're good with property in the sense that you understand, just the nuts and bolts of maintaining property and recognizing good property and you know how to work with contractors and so forth, or do work yourself, then you got both of the things that you need to have. So generally, in my experience, people tend to be stronger on one or the other. I have a background in both, so if you're a pastor, you better be able to do this kind of thing. If you're not, then you should probably get out of the ministry. But but often guys who are in the ministry wouldn't have the other side. Wouldn't have the background in trades and stuff like that, and I have that. So if you're going to have more one than the other, I think you better be good with working with people. You got to be able to read people well, not get fooled, not allow yourself to get kind of strung along by, sad stories and stuff like that. Kind of have a good kind of horse sense, that kind of thing. And then you can, work with contractors that you trust. What I've seen is sometimes guys who are maybe strong on the property side but weak on the people side end up getting in a bad place. You can get in a bad place, but either way you go. But that's more often the case that people who don't know how to work with people are the people who get in a bad place. When it comes to screening tenants, that's the whole game right there. You got to be able to screen. So if you know how to screen and you know how to set things up so that you get the kind of people you want, then you're going to you're going to be much better off than if you can't. So in terms of my own philosophy, and I know this is not the only way of doing things, but I tend to specialize in mid to lower mid properties in safe neighborhoods. And then what I do is I make sure they're very clean, very attractive, but not a lot of frills or anything like that. And then what I do is I price them a little bit below market. And the reason I do that is because I want lots and lots of applications. And my philosophy is probably 1 in 10 are actually somebody you're going to want to have. So with that in mind, if you want to have two good tenants, you better have 20 applications, that kind of thing. And then your best friend is the credit report, because it tells you everything you need to know about the person. If a person has bad credit, well, there's reasons for that, and they'll have all kinds of stories about why their credit should be, ignored or whatever. Now, I have on occasion given, I've leased property to people with marginal credit, but I always have a cosigner. So if your credit score is, say, I don't know, 650, that's too low for me. But what I'll say to a person with a score like that, I'll also say, hey, you got a, mom or dad or somebody else is willing to. I remember one time this one gal came in and she had kids and all this kind of stuff, and her credit was like, it was like maybe 600. It was awful. And I said, well, you got anybody you can cosign? So her mother cosign, and she had like a credit score of like 825, and I said, "You're good. You're good. Grandma's not going to let me down." That kind of thing.
Yep. Yeah, very good. No, I appreciate that. Nobody's emailed me and said, stop quoting Dallas Mount on episode 2. Like, this is going to end up being early 500s episode, So I've been doing this for over 8 years now. And I go back and quote Dallas Mount on episode 2 all the time, because I asked him in ranching, what is the most common barrier to success? And he didn't even hesitate. He just said, without a doubt, it's the people. If you can't manage people, if right, and ranchers maybe famously, I don't know, you could tell me, but ranchers maybe famously tolerate less than average returns on their effort because the lifestyle is so great. And so it's not the money that makes them stop ranching. It's the fact that they couldn't get along. And the tragedy is a lot of times they can't get along with family is why they stop ranching, and so it is always the journey that I've been on with this podcast is that it continues to confirm the fact that ranching is a business, and if you can, just understand that it's a business and that all the other business principles apply about margin and turnover and direct costs and all those things, and the management of people, all those apply to ranching, then it's going to put you a long ways down the road to success as far as being successful in ranching. Is you just apply the business principles, including managing people well, right?
Yeah, it makes complete sense to me. I don't know anything about ranching, but it seems like that there are certain things that are universal. They just apply to everything.
Right, certainly. And then as far as anything to say specifically on being a landlord once you've got a client that you have screened, or is the screening process really make the landlord piece of that easier?
Well, it makes it a lot easier, but I also think that as a landlord, you need to be really good at a few things. I think one of the things you need to be good at is repair and maintenance. So if you get some communication that tells you that something is wrong with, let's say a boiler or something like that, that's huge. You have to drop everything and make sure that gets taken care of immediately. There are certain things that you just can't, just say, I'll get around to that, or I'm going to get 15 prices to make sure I get, save $200. What you need contractors that you've worked with for a while, that you have a lot of confidence in, and they want you to be their customer because you pay quick and you don't complain and you're not fussy, all that kind of stuff. And if you have a good relationship with your subs and you respond quickly to genuine needs by your tenants, your subs and your tenants are going to like you. Now there are going to be some, awkward things maybe every once in a while, and just in terms of scheduling or maybe miscommunication, that kind of stuff. But if everybody knows you're doing, everything that you should be doing as a landlord, and you're not charging people kind of like crazy rent. If they already know they're getting a good deal, then you've got a formula for a long relationship. So like right now, all my tenants have been with me for years and years. I haven't had to find a new tenant in a while. I mean, I'm thinking maybe 6 years, something like that.
Yeah. No, that's great. I appreciate that. That's helpful. Again, it all applies, right? One of the guys one time told me, he said, if you're going to stop making your own hay and start buying your hay, the best thing that you can do as a person looking to buy hay all the time is make sure that you show up when you say you're going to show up and write them a good check.
Yeah,
that's as simple as it is.
That's right. That's right. Yeah. It's amazing how people think that if they write a bad check, they'll be better off.
The guy will come fix the boiler quicker if your check always cashes. That's kind of what I hear you saying, right?
Right.
That's good. Okay, let's talk maybe about benchmarks. Are there benchmarks that you would say, hey, have this in place in your own life financially, or benchmarks that you would say, hey, when the market is doing this, it's a time to get in, and these are some things that you want to have in place. Earlier you mentioned cash flow. These properties need cash flow. Do you have some of those things that you think are important pieces of this?
Yeah, I think that you need to be in a place where you've got margin for error. So not everything's going to work out, and when things don't work out, it can't be the end of the world. So now that doesn't mean that you don't sometimes really extend yourself. I remember one time, and this is something also to think about. You need to have a wife who has good understanding and risk tolerance, or at least a very high faith in you. Otherwise, her anxieties are just going to make your home life unpleasant. My wife comes from a real estate family, so when it came time for us to get into it, it was sort of like, of course, that's what families do, right? So it was never like a long conversation. But if you have good relationships with people, and you got margin for error, and margin for error doesn't mean just enough money in the banks. It also means enough confidence invested in you from the people that you are surrounded by, that kind of thing. Then you got the kind of assets that you need to have in place to weather a bad move, because like I said, you're going to have those. And then I think another thing is you ought to have the personal confidence that I think you can develop over time that makes it possible for you to sleep when you've got stuff on the line. You know what I'm saying? If you're going to let that stuff just kind of eat away at you and just make you miserable and edgy all the time and unpleasant to be around, then, you need to do something to get that taken care of, so that you become the kind of person that can shoulder those burdens, responsibilities, anxieties, stuff like that.
Yeah, certainly. What about like the percent of the purchase price? Do you have benchmarks there as far as percent of the purchase price in cash or anything like that?
Well, again, it kind of depends on the financing. If you can get into a property and it cash flows and, you've not put a great deal down, well, good for you. The problem is with today's market, that's unlikely to happen. You're probably going to need at least 25% down or more to make a cash flow. And then at that point, the decisions should probably rest on, whether or not this is the best place to put the money, whether or not you're going to need access to it quick. I mean, if it's in real estate, you're not going to get access to it quick unless you've got a bank that's willing to extend you a line of credit. So it's got to be money that you can sink for a while. And then, if there are other options, if you can be, in some safer, sort of securities, and you can still, obviously CDs and stuff like that. But, again, the problem with safe investments is they come with a ceiling. No one ever got wealthy on American savings bonds. So those are the trade-offs. So, and I guess it has to do also kind of with the stage of life. So when you're younger, you should have a higher risk tolerance because you have a longer period of time to recover if things don't go well. And then as you get older, you tend to get more conservative just because your time horizon is shorter. It's just natural.
Yeah, certainly. So a couple of times you've mentioned risk and this idea of risk. And I think even at one time, maybe there was a discussion of you writing a book on risk. Maybe that manuscript still exists somewhere and we can read it someday. But anyways, I would love to hear your thoughts on the subject of risk and some of those things.
Yeah. Okay. Well, I think getting up in the morning, getting out of bed is a risky thing to do. So if you get my drift, there's no such thing as a risk-free life. And people who pursue a risk-free life tend to make really dumb choices. And what I mean by that is they tend to buy, the risk-free sort of product. Now, the risk-free product can be packaged as, a safe, secure job with benefits. I don't know if anyone believes in those anymore, but once upon a time, everybody thought that was the way to go. And then everybody got laid off. They discovered that that wasn't as safe as they had assumed. So I think that once you accept the fact that life is nothing but risk, then you need to, you find yourself in a situation, well, how can I live with this reality? One of the great things about being a Christian is you have these assurances that even if things go really bad, that, the Lord still loves you. He's still working in your life. There's something else in store, maybe, that kind of thing. If you ever find yourself like sitting in the middle of the desert on a mountain like Job with sackcloth and ashes, you're like, well, that wasn't the first time. I mean, there's this other guy.
You have not been scraping your sores with shards of pottery yet, so it's probably not as bad as it could be, right?
Right. Yeah, that's that kind of thing. But we also have, I think, a basis for confidence that things are going to work out well in the long run. And then in the near term, you could be going through a lot of bad stuff. But in the long term, and that long term can be a great consolation, particularly when you're in the middle of that bad stuff. So I think that's my preacher moment. But I think just generally, you just need to be sort of person that maybe even gets a little bit of a charge out of it, of taking a risk. So if the adrenaline flows, then you're probably going to have a higher risk tolerance. If it never flows, so how do you get it flowing? Well, I guess maybe it's like learning how to ride a bike. You have training wheels at first, and you do some things that are just a little bit risky, and then you realize, wow, that worked out okay, and then maybe you move on to the next thing. So I wouldn't say put up the farm on the very first thing you're ever trying to do that has a prospect of going bad. I would say that you should hold stuff back and then learn. So getting back to Nassim Taleb, he has this thing called the barbell thing. Have you ever heard of that?
Yeah, I think so.
Has anybody ever talked about it on the show, or
No,
should
sir.
I mention it?
Nope.
Okay, but basically the barbell idea is that for every risk you take, there should be something that's pretty secure that it counterbalances it. So that's the idea. So, like when I would take risks, I knew there were some things that I would be able to fall back on, like my wife will still love me, stuff like that. And that has a way. So in other words, the counterbalance doesn't have to be monetary. It doesn't have to be like the same kind of thing. But you'd better have something really reliable in your life that helps you. It's kind of like works like a cantilever. You're familiar with cantilevers? Mm-hmm. So for folks who aren't familiar with a cantilever, basically when you see like a deck extend out over, say, and there's no support underneath, what's happening is there's a really significant counterweight at the other end that you can't see and appreciate, or it's tied into some kind of sort of foundation that's really solid that allows you to kind of go out. And that's kind of what you need. You need to be able to say, okay, I'm going to go out on this plank. At the end of this plank. And it's not going to collapse because I've got this other thing I'm tied to. So I think that's a couple of visual kind of aids to help explain what I'm getting at.
Yeah, well, and I mean it's good to recognize that it's not always monetary, right?
Yeah.
And that you've got these my wife will still love me kind of things, but also at the same time, maybe let your wife know before you take the risk.
Oh,
I mean,
yeah.
that's just basic, right? But I,
By the way, wife, I just put up the farm.
yeah,
Yeah,
we
no, you
now
don't want to
own
do that.
property in Boston, and I'm gonna have to travel there and fix it up.
That's right. Yeah, you don't want to surprise her.
Right? No, that's obvious, but I think that is helpful to have those kind of things that are balancing the risk and recognizing that it's not always monetary. And I think if those things are equal, it will maybe it won't seem like as much of a risk where if you do have a category like my wife will still love me versus I'm going to make a financial risk, those things that can be a little more difficult because it's not one to one as far as there's still the risk of loss here, but we can start over, right? Or we can start
Right.
again, right?
Yeah, and I think too, particularly if you're thinking about your wife or just your friends or your family, if they know you're doing it for the right reasons too. Let's say you've got a growing family and maybe the income that you're bringing in from your 9 to 5 isn't quite doing it, and you say to your wife, I think that if I do this thing on the side, I think that if it goes well, we're going to be in a great spot in a couple of years, and it'll help us to make ends meet. And she might still be a little nervous, but she'll know that you're doing it for everybody in the family. It's not just your ego. It's not just a way to make you feel like you're a winner or something like that. And then she'll be praying and pulling for you and trying to sell your stuff for you and whatever you're doing.
Yeah, no, that's good when you're not trying to keep up with the Joneses or satisfy your ego or whatever. That really does help, right? Let's take a quick break and hear a word from our sponsor today, Sunshine Bible Academy.
I'm Tim Michelson. My wife Courtney and I have 3 of our children currently attending Sunshine Bible Academy. Our oldest 2 are seniors this year and started as freshmen 4 years ago, and our third is a sophomore and started as a freshman as well. We did not always plan to send our kids to Sunshine, although I graduated from Sunshine in '98 and my wife knew of Sunshine. She did not want our kids 250 miles from home during the week. Our kids were wanting to play sports, be in band, and be involved in other opportunities that homeschooling did not offer. When we attempted to let them do those things at the local public school, we realized that was not the right fit. We toured Sunshine, and the kids felt very welcomed and wanted. Once at Sunshine, our son really grew to love the dorm life and refer to all the boys as his brothers. Our girls felt very accepted in the dorm environment as well. The dorm counselors in the boys and girls dorms have been outstanding mentors to our kids. And now as we have toured colleges, the new dorms at Sunshine are nicer than any college dorms that we have seen. All 3 of them have excelled in music, art, and sports, and we have watched them grow in spiritual maturity and in understanding biblical concepts through yearly Bible classes, fellowship groups, chapels, nightly dorm devotions, as well as a biblical-centered curriculum in all their subjects. We highly recommend Sunshine for your high schooler to flourish and make lifelong friends.
Anything else on the topic of risk or the subject of risk? I appreciate where you started. Getting out of bed is a risky business. So, but anything else that comes to mind there?
Well, I would say that when it comes to risk, it's interesting because it depends on the domain. So I've known guys who are kind of daredevils when it comes to like physical like matters, like
skydiving,
bungee jumping or something like that. But then when it comes to money, they are like about as conservative and as fearful as you get. And I've seen the other way. I've seen guys who are like maybe a little bit skittish about things that we would call for physical bravery, but are just like lions when it comes to other things, So I think maybe you can carry over from like domain to domain, but you might find that you've got a kind of propensity to maybe be more comfortable with risk in certain places and not in other places.
And is that kind of just a know and understand yourself deal, and that you would say, okay, this kind of a path, this track, this real estate investing is right for me or not right for me based on my own personality? Is that kind of what you're alluding to there?
Yeah, I think so. I guess the only caveat I'd add is maybe you can work on it. Maybe
it's a muscle you can flex.
Right.
Yeah, sure. No, that's helpful. I got a couple more questions as we point towards wrapping up here. First one is, did we learn anything in 2008, or are we, where do you think we're at?
Yeah. Well, the market forces are different. And I'm not as much kind of in the know like I was back then, because in those days I was also representing other people. I was helping people buy and sell. But it seems to me that the combination of COVID, immigration, and large-scale sort of hedge fund investing in the real estate market have all contributed to an inflation of prices that has a different character than what we saw in 2008. So what we had in 2008, the things that were driving that lunacy had to do with the relaxation of lending standards, and then super low interest rates, and greed.
Yeah. There's that, like, it was deregulation that caused the housing crisis. Well, and sin.
That's right. That's right. Yeah. Yeah. But it was so crazy is that people should have been able to see it coming. And I think many people did. It was just, there were like political forces that just made it seem so expedient. And so what you ended up having is, people like Barney Frank. I don't know if folks remember him, but he was about as left-wing a legislator as you could hope for or imagine. I don't know if you hope for that kind of guy, but you can imagine. And what he saw is like, okay, here's a way for us to get poor people in on the boom. And so you give him credit insofar as you could say, well, what he wanted to see is maybe lower income people enjoy the benefits of rapidly appreciating assets. At the same time, he just kind of like, I don't know, if it wasn't him, then it was somebody else who just said, well, let's just pretend that a lot of these folks don't know the first thing about handling money. And if you give them money, it'll be just like when the guy hits the lottery and he goes out and just blows it in 2 years, that kind of thing. Anyway, and that's what happened.
Yeah. Yeah, for sure. So, and then kind of the maybe last thing that I would ask is, do you have recommendations, resources? You mentioned Nassim Taleb's book. Do you have other things, maybe even specifically related to real estate investing and entrepreneurship, that are kind of favorite resources of yours?
Well, this is going to sound kind of cheesy, but the Robert Kiyosaki stuff, particularly the first couple of books, he writes the same book every time. It's basically, he's got like 20 books, and it's all the same book. But the first two books, the first two or three. So the first one is Rich Dad Poor Dad, which is just a good sort of like book to read, because it's such a contrarian take on things, and it introduces you into the mindset of, say, the entrepreneur, the investor, and out of sort of the kind of the standard categories of the Dave Ramsey kind of approach to life. Hand your money over to some money manager and just keep doing it a little bit at a time. So anyway, it's that, Rich Dad Poor Dad's good for that. And then I think the Cash Flow Quadrant, which is, I don't know if that's the next book, but that one's a really good book just because it helps you think about taxes, and just how, all the ways you can. I became a real expert on taxes. I realized that I had been overpaying the government for years, and I needed to figure it out.
And they're not afraid to let you do that.
No, they don't have a problem with you overpaying, not at all. If you don't pay enough, they'll come after you. But when it comes to overpayment, they never correct you. Now, if your math is bad, they'll correct you. But if you fail to take something that you could have taken as a deduction, they won't like step in and say, "Hey, by the way, you missed an opportunity here." They won't do that. So those books, and I do think that just the Millionaire Next Door book. I don't know if you're familiar with that one.
Mm-hmm.
It's a fun book, mainly because again, it has a way of showing the reader that all of their assumptions about who wealthy people are largely wrong. And it helps them see, okay, yeah, my Uncle Bob, who still is driving that pickup truck from 1974, you know what? The reason why he's worth $15 million is because he drives that pickup from 1974. That kind of thing.
Yep. Very good. Well, I appreciate your time today. Appreciate you coming on and sharing some of the lessons learned and some of those things. And I guess give people an opportunity to connect with you. Where can they find your stuff and listen to what you're doing?
Okay, well, thanks for having me on, Clay. But I'm a co-host of a couple of podcasts. You mentioned the Theology Pugcast. So if you're into academic kind of things, that's a place to go if you're interested in, say, conservative, sort of Christian, theological and philosophical conversation. That's like maybe, 0.1% of the population in the United States. The other one we just started, my friend Chris Flugstad, which is very different. It's much more practical, and it's related to entrepreneurship. And Chris is a successful entrepreneur who sold a business that he had started in the Seattle area and did really well. So one day we got to talking and we said, let's do a podcast and talk about these things. So we're just getting going. We've interviewed a few people. We haven't released those interviews yet. We're still kind of getting everything lined up. But the first 2 episodes are available where I interview him and he interviews me.
Yep. Very good. Well,
Yeah.
I'm like I said, longtime listener of the Pugcast, and have really appreciated that for many years. Listened frequently, and then have listened to both of the interviews on Chris and Chris Talk Business, and really appreciate them, and am waiting with bated breath for future episodes. So
Great. Yeah. Hopefully it'll be out pretty soon.
all right. Well, Chris, thanks for your time today.
Yeah, Clay, glad to be with you. Thanks for having me.
Very good stuff there with Chris Wiley. It's hard for me to call him Chris. He goes by C.R. Wiley in a lot of places because of a name similarity to a football player, I think. And so I've always had him in my head as C.R. Wiley, but Chris Wiley, really appreciate his perspective and just the even restrained way that he talks about real estate investment and the fact that we want to look for good clients and good renters, and not just go after maximizing the money that is potentially we can bring in. So very much really appreciated that conversation. Looking forward to next week on the Working Cows podcast. We'll be talking with Dan Glenn. Actually, not next week, in a couple of days on the Working Cows podcast. We'll be talking to Dan Glenn of Deep Grass Grazers about his operation and the way that they've gone about developing the seed stock that they are having one of their first sales in the history of the business, and so offering those genetics to you. So looking forward to sharing that conversation with you, coming your way real soon on another episode of the Working Cows podcast. We'll see you then.
We invite you to visit workingcows.net to subscribe to the show via iTunes or Stitcher. You'll also find detailed show notes pages, resources from our guests, and the industry leaders who have influenced them. For more ideas on putting your cows to work for you in a more profitable way, tune in next week.